We're tracking Nvidia shares this morning. NVDA, the ticker symbol up on your screen right there. The shares are moving to the upside today after leading the declines in the Magnificent Seven yesterday, Monday, with those stocks shedding over $650 billion amid a steep global sell-off. The stock's volatile run over the last month here is leaving investors wondering if now is the time to buy. Let's bring in Patrick Moorhead, the founder and CEO of More Insights and Strategy, joining us now here. All right, so Patrick, is now the time to, if you're not already involved in some form or another and have exposure to Nvidia, is now the time?
Listen, giant sell-offs are always a huge opportunities for investors. When I stand back and when I look at the PE ratio, it's reasonable when you consider the growth rates. Their midterm competitive position hasn't changed from anything. And when I look at short term, there is a little bit of risk here with this potential Blackwell push, which is the follow-on to their H series. But customers can still continue to buy the H series. So even on the short-term risk, I don't see a tremendous amount of downside here.
So Patrick, I'm curious on what you attribute just the volatility to. It sounds like it's a bit of an overreaction. It sounds like you think that any sort of hiccup here, if we do see that in production, is going to be more of a short-term blip. Was this just a stock, just given the massive run-up that we've seen, which is primed and positioned here for this type of pullback, and then therefore, kind of going to your thesis of what you just said, it maybe does present a buying opportunity then for investors?
Yeah, you nailed it. I think on one of your previous shows, I even used the word hiccup. Investors, that this stock was so hot for so long that any type of hiccup or bad news could mean a sell-off. And you add to what happened over in Japan and some other risks that melted the entire market. But you have to stand back and look at the overall short, midterm, and long, and then align whatever investment strategy you have with those opportunities and risks. I don't see anything changing in the data center for Nvidia for the next 12, maybe even 18 months. There is a little bit of short-term volatility until we understand what exactly is happening with Blackwell. Which, by the way, could be an opportunity for AMD short-term, Broadcom, and maybe even Marvell to go in and grab some share. But that's a short-term, not a midterm, and then long-term, right? It's a totally different conversation.
As of today, Nvidia's stock price has risen by 142%, making it one of the best-performing companies on the market over the past year. However, a closer examination of this semiconductor giant's recent price movement indicates that its astounding surge may have finally come to an end. On June 20, Nvidia's shares reached a 52-week high, but since then, the stock has fallen by 22%. There have been questions expressed concerning Nvidia's exorbitant value and its capacity to maintain its startling expansion into the end of the following year. Analysts project that Nvidia will hold a 70% to 95% market share in AI data center graphics processing units, GPUs. This puts the business in a strong position to benefit from the long-term and short-term sustained demand for AI accelerators. For example, recent data from Advanced Micro Devices, a rival of Nvidia, suggests that the strong demand for AI chips isn't going away. In the second quarter of 2024, AMD saw a phenomenal 115% year-over-year increase in its data center revenue, reaching $2.8 billion. This remarkable growth, according to the company, was primarily driven by the steep ramp of AMD Instinct GPU shipments, which are AI accelerators used in data centers. Additionally, it's important to remember that AMD sold just over $1 billion worth of MI300i GPUs in the most recent quarter. AMD has revised its forecast for data center GPU sales in 2024, estimating to make $4.5 billion as opposed to $4 billion previously. This is also a welcome increase above AMD's January prediction of $3.5 billion for data center GPUs. This challenger to Nvidia is currently experiencing strong success. However, Nvidia's progress does not end there. In the data center GPU industry, Nvidia is a far bigger player than AMD and is expanding at a far quicker rate. In the first quarter of fiscal 2025, Nvidia sold $22.6 billion worth of data center processors, generating a staggering 427% increase in revenue year over year. Nvidia recorded such amazing data center expansion for two reasons. Initially, it is evident that the business holds a leading position in its industry. Second, according to market research firm Technavio, the size of the AI chip industry is expanding at a strong yearly rate of 68%. Nvidia's company will likely continue to grow at a strong pace in the future, as the firm believes that the AI chip market could rise by $390 billion between 2023 and 2028. With all these developments under consideration and analyst predictions, we'll talk about target projections and advice in today's video, so make sure not to miss out. However, before you do, if you'd like to stay up to date on Nvidia's most recent updates and the most recent news from the stock market, you can subscribe to our channel. We publish daily updates about the biggest shifts in market catalysts, so click the bell icon button to ensure you don't miss the most recent updates. All right, back to today's video.
Thoughts on Nvidia, because people had the stock split and they got excited. It was at 120, went up to 140, and now it's barely holding 100 here. I think it's at 102 or something today. Tell me about Nvidia. Where do you think it's headed, and how would you look at this one?
Absolutely. I think it's important to talk NVIDIA due to its large mega cap and exposure that it has to the market. But we've had earnings so far, and the hyperscalers have told us that they're, again, increasing their CapEx spending. And who does that benefit? That naturally benefits NVIDIA. All AI points back to NVIDIA, at least in this early stages that we are. There's concerns with the Blackwell chips delays that were announced yesterday, but there's definitely stock gaps that NVIDIA has put in place. There's even demand for their Hopper chip. But what's important about this NVIDIA issue that we're assessing, especially with Blackwell, that's a supply side issue, not a demand. There's back orders that will eventually normalize. So I think that's very important to pay attention to. And also, out of all of the trades that I'm providing you today, Nicole, when there is downturn and there's volatility from an options perspective, that heightens premiums. That is such a dream for an options trader. And yesterday had one of the best trades that I've seen on NVIDIA, and adding it to your longer term portfolio. NVIDIA is a stock I absolutely would own. Don't trade because of the high beta that it is. But yesterday, or even earlier today, if you sell an at the money cash secured put, that's about 45 days out, putting us in the September 20th expiration. At the money be around 100. You could collect $10 worth of premium within 45 days. That's 10% of premium that I would make, giving myself a $20 spread of profit potential. Right. That's a rare opportunity.
Yeah.
Timothy Arcuri, an analyst at UBS, projects that Nvidia may make $204 billion in revenue in 2025, which will largely correspond with its fiscal year 2026. In contrast, Nvidia's revenue for the current fiscal year 2025 is predicted to reach $120 billion. According to Arcuri, Nvidia's revenue should increase by 70% in the upcoming fiscal year. Arcuri's projection is predicated on the robust demand for Nvidia's recently released AI chips, the Blackwell generation. The analyst notes that in order to house Nvidia's Blackwell processors, data center operators are putting large orders for liquid-cooled server racks. Consequently, Nvidia may ship 69,000 Blackwell-based systems. For every 5,000 of these systems, the company will make $9 billion in revenue. Furthermore, Nvidia's earnings per share could reach $4.95 in 2025. Once more, that is significantly more than the $3.74 per share average projection for the fiscal year 2026, which falls within 11 months of the 2025 calendar year. Based on its forward earnings multiple of 43, which is lower than the 45 earnings multiple for the U.S. technology sector, Nvidia's stock price may rise to $161 next year, assuming its fiscal 2026 earnings meet the consensus forecast of $3.74 per share. That would represent a 50% rise over existing levels. However, investors may be able to anticipate further growth from this semiconductor company if Nvidia's earnings approach Arcuri's prediction. So what does this really mean for Nvidia's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector, or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more. Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on AI-related opportunities. At the same time, Moomoo is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks. Enjoy a limited time 8.1% APY on idle cash for 3 months and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Moomoo for sponsoring this portion of the video.
The narrative, has it all changed surrounding the AI story? Has some of that shine maybe worn off? I'm curious just how you're looking at the development, specifically even really what we've seen over the last 2 or 3 trading days, and just, I guess, put that in better perspective maybe for some of our viewers.
Yeah, so I really see three major buckets for AI plays. The first one is this infrastructure. Anybody who is related to building out these massive data centers with GPUs in them, I think I'm very confident next 12 to 18 months that's going to be the case. And we saw the capital expenditure commitments by Microsoft and Meta and Amazon. It is absolutely pedal to the metal on that. And then there's the longer term downstream, right? The enterprise software providers that there has to be benefit in a large scale for all this to interconnect, because there is just factually an overinvestment in the capability versus the downstream benefits at this point. And if that gear doesn't connect in, let's say, 12 months, what's going to happen is the investors of these enterprise software companies are going to be asking, where's the benefit, and have super pressure on these companies to start scaling back. And that is when all bets are off. And the final thing I want to add is I still think there's this untapped opportunity, which is the AI PC and AI smartphones. So we saw a little bit on the AI smartphones related to Apple. We saw a slight bump on that, but when you consider there's only one generation of Apple smartphones that can do all the AI tricks out there, and then people are going to have to buy new smartphones, new tablets, and even new Macs. That's really, I think, good news for companies like Apple and Qualcomm and even AMD and Intel.
All right, Patrick Moorhead, always great to get your insight. Thanks so much for joining us here this morning.
Thanks.
Founder and CEO of More Insights and Strategy.
Because of this, astute investors may want to take advantage of Nvidia's retreat to purchase additional shares, as the company may be poised for short-term strength given the enormous AI potential it possesses. Let's now discuss what you ought to accomplish regarding Nvidia. It's crucial to keep an eye on your portfolio and equities over the long term, even amid uncertain market conditions. History demonstrates that all market conditions, including bull and bear markets and sell-offs, are transient events. Although there are ups and downs, the good news is that market expansion has consistently prevailed. Over time, the major indices have consistently experienced gains following difficult times. This indicates that you should hold on to a player if they have the capacity to endure a challenging environment and if their long-term potential seems promising. Consequently, Nvidia is a fantastic investment or hold right now. Furthermore, if you want to purchase, the shares will be available for a very fair 37 times forward earnings expectations, which is a significant discount from nearly 50 times only a few weeks ago. In the early phases of its development, the AI market, in which Nvidia is a leader, is seeing rapid growth. Analysts estimate that later this decade, the $200 billion AI business would grow to over $1 trillion. Nvidia ought to gain from its leadership and emphasis on innovation in order to hold on to this position. Because of this, Nvidia is a great stock to add to any long-term growth portfolio during this market sell-off. With all of these considerations, Nvidia is unquestionably a great buy, especially if you're looking to invest for the long term because the company hasn't reached its full potential yet. What do you think about Nvidia stock? Is it a good buy at the current price? Please share your opinions with us in the comments section, and don't forget to let us know what you think NVDA is worth. If you're interested in learning what other companies, like Nvidia, have been up to lately, click on the next video on your screen. We'll see you there.